Are you an early stage technology company that needs money to push forward? If so, you've got limited options. Dip into your personal savings, maybe ask families or friends. The other thing you should consider is an investment from an angel investor. In today's episode, we talked to two female executives who lead a group dedicated to angel investing right here in Ottawa. All this and more coming up on today's episode of Techopia Live. Hello, I'm Michael Curran from the Ottawa Business Journal. Welcome to Techopia Live. This is a regular podcast from OBJ that focuses on executives from next generation technology companies. We shine the spotlight on up and comers, and we keep you updated on the established players, all with a goal of keeping the tech sector informed and connected. Listen, we got a great episode for you today. We will be exploring the world of angel investing right here in Ottawa. Yeah, that's correct. Ottawa has its own a group of angel investors right here. And the group was founded in 2009 and brings angel investors together with investment-ready companies, most commonly early-stage tech companies that are looking for capital. So let's meet our two guests now. First off, we've got Suzanne Grant, the Executive Director of Capital Angel Network. Hello, Suzanne.
Hey, Michael. Thanks for having us back. We're just delighted to be here.
Yeah, you are returning. That's right. But you know what? Actually, Jennifer's coming back too. But we don't typically have both of you together. So here's Jennifer Francis, the chair of Capital Angels Network as well.
Hi,
So
it's great to be here.
Two for the price of one today.
We're free, I think.
Yeah, that's what I was going to say. I think it's all free, but we'll pretend there's some added value there. I think there is for sure. So listen, we're going to have a great conversation about Capital Angels Network and the state of angel investment in Ottawa. Suzanne, I want to start with you just to lay the groundwork here. Tell us about what Capital Angels Network is.
So Capital Angel Network is a membership group of early stage investors. We have 45 and growing. And those investors include angel investors, CEOs, founders who've exited their companies. We have venture capitalists from as far away as Toronto and Montreal who are also in our membership, and groups like Ontario Centres of Innovation. So it's really a mini ecosystem within our membership, really devoted to elevating and helping entrepreneurs get to commercialization, to provide not only investment, but also mentorship. Since 2009, there's been 65 million in investment. And over the last 2 years, we've done 15 million in investment. That's the members themselves that do the investment.
That's pretty cool. That's pretty cool. And that's a big impact, particularly when you consider that you're investing in very early stage companies at a very critical point in their development.
Right.
Jennifer, and I'm going to ask you. So let's talk about those companies a little bit. We just announced at OBJ the 40 under 40, and I think, if I understand correctly, Jennifer, we've got some companies that have benefited from Capital Angel Network.
Yeah, for sure. We were pretty excited to see the list. So we had leaders from 3 of our portfolio companies. So Wellbe, BlueWave.ai, and Food Cycle Sciences all had leaders nominated for the top 40 under 40. And also our own Matt Henley, who's part of the CAN group and manages our deal flow.
That is awesome. Yeah, that's great to see 40 under 40.
And I just want to add, we also, a couple of weeks ago, we were at the IO Accelerator graduation party, and we got to watch 6 of our portfolio companies graduate into the IO Scale-Up program. So, and IO is Invest Ottawa for those who are.
Yeah, that was a pretty cool event for sure. And the caliber, by the way, Jennifer, that's what you're saying, of companies that was up there on the stage was pretty extraordinary.
Yeah.
Jennifer, I want to stick with you for a second. We know that we've got a strong, robust tech sector here. As for the investment climate, things have really changed, right, Jennifer? So, I mean, if you go back earlier in the pandemic, we saw these amazing valuations for a lot of early stage companies, and the the floodgates, so to speak, were open from a funding perspective. But tell us about what it's like today.
Well, it's certainly shifted a lot. I think back to the start of the pandemic, and everybody was kind of panicky that money was going to disappear, and then that didn't happen. And in fact, through the pandemic, valuations rose, money was free flowing. Lots of capital at all stages of the ecosystem, and of course, the public markets were high. And then in the last year, we've seen, particularly in the tech sector, the public markets have come down, and then the later stage investment valuations started coming down to match the public markets. And we're seeing that flow down through the pipeline down to the early stage of investments. And now money's getting pretty tight. So, it's taking much longer. It's much harder to raise with the VCs right now.
Okay.
And just from an angel perspective, it's really interesting. As angel investors, when the valuations got really high, it was kind of tough. People were coming in trying to do their first raise with valuations, that a few years ago would have been, 3 to 7 million. All of a sudden, they were coming in at 10 to 20 million as the early valuations.
Okay.
So now valuations are coming down, which is much better for angel investors. And
yeah, it's a little counterintuitive in a way, right? Because the valuations come down, the deal size gets a little bit more palatable for your angel investors, and they're more likely to invest. Is that what I'm understanding?
Yeah, it becomes easier to get in on opportunities, and then from a founder perspective, they're looking to make their money last longer, so they're building. A good founder will be looking at, when money's tight, you want to get further along with the money that you raise. So you get a different type of growth pattern during the down cycles than you do during the up cycles, as people try to do more with less.
Yeah.
And all of that means that, from an angel investment perspective, you're getting in at a better valuation. You're seeing your company make more progress on the investment that you made. So it can be very, very fruitful for angel investors in this type of climate.
So we shouldn't conclude, Jennifer, that simply because the investment climate tends to be a little bit foggy or negative right now, we shouldn't conclude this is a bad time for either angel investors or for local companies early stage looking. Is that a reasonable conclusion?
Yeah, I think that's fair to say. And I think, if I was a founder, I'd be thinking more about how much progress can I make with 500,000 or $1 million, and it might take me longer before I get 5 million or 10 million, or, we've had rounds in Ottawa of, 65 or 100 million. Those are likely to take longer. So I have to have a slightly different growth strategy. But once you figured that out, it can be very successful.
Yeah, I think they kind of tend to lower their burn rate in that.
Yeah.
Suzanne, I want to come back to you. So if there's someone watching this, listening to this episode, potentially they know someone, what types of companies should be approaching the Capital Angels Network?
So our investors look for companies that have potential to grow to $100 million in value. We also look for companies that are tech or tech enabled and have demonstrated some traction. There's a lot of creativity right now on how to use technology. So we're seeing that really executed across a lot of verticals. One more thing to add, though, I think the investors are looking more carefully. There's a bit more scrutiny right now, and they also have more choice. And they're looking for companies that are going to be more conservative on their capital requirements and burn, because there's risk downstream about getting future capital. So they're really looking for companies that really understand how they're going to get to break even. They understand their unit economics, and they really understand their customer and their competitive advantage.
Okay. And Suzanne, talk to me about the process of just approaching Capital Angels Network. Does someone just send you an email, or are they vetted in some way? Talk a little bit about the process.
We get a lot of emails. We get a lot of LinkedIn DMs. We get a lot of referrals. So the process is multi-pronged. We have good relationships with local accelerators, incubators, innovation hubs at the universities, and beyond, kind of the corridor, that innovation corridor from Montreal out to Waterloo. And we're plugged into the other angel networks across the province as well. And that helps our founders fill up their round. So there can be referrals. Matt is there. He's also scouting. He's looking for who's on the 40 under 40 list, who's won the last competition, who's graduating from an accelerator, and he'll reach out and have conversations. So it's kind of a two-way thing. Ultimately, there's time for a chat with Can. And Matt, what he'll do is when he thinks the companies are ready, he'll give them a shot and put them into what we call our deal room inbox. And then from there, Can has a really robust selection process. So it's multi-staged. We look through the profiles first. The screening committee says, here's the top 6 that we should see this month. Then it goes to selection, full pitch, Q&A, and then we say, what are the best companies for this group to present in the member meeting in a week's time? And so we see typically 3 a month come through, 9 months a year.
Very interesting.
Yeah.
Very interesting. It sounds great if there's a regimented set process to vet people and kind of walk them through the process and all that type of stuff. Jennifer, I'm going to ask you about kind of the hot investment sectors, if I can put it that way. But before I do that, Jennifer, I want to pause our interview just for a second and recognize the sponsor of this episode, Perley Robertson, Hill and McDougall Law Firm.
Tech companies must move at the speed of light, and they need a law firm that moves just as fast. Perley Robertson, Hill and McDougall has developed long-standing expertise in helping tech companies address their legal matters. As Ottawa's largest premier full-service law firm, Perley Robertson, Hill and McDougall has provided a number of specialized legal services for the past 50 years. Perley Robertson, Hill and McDougall's in-house legal experts can help tech companies with financing strategies, venture capital, private placements and public offerings, mergers and acquisitions, intellectual property protections, shareholder agreements, and much more. To learn more about how Perley Robertson, Hill and McDougall can help your company, visit perlaw.ca.
All right. Thanks again to Perley Robertson, Hill and McDougall. We're back with Suzanne and Jennifer from Capital Angels Network. As I was saying before the break, Jennifer, I want to talk about the hot sectors. So, it is kind of commonplace that there'll be some sectors or some investment opportunities that will be a little bit more desirable because of technology or societal or business trends. Talk to us a little bit about what some of those sectors might be.
Sure. And I'll just start by saying Capital Angel Network does invest in a wide variety of sectors because we have a fair amount of diversity in our membership, and that creates diversity in our interests as well. Historically, we were very tech, traditional Ottawa tech focused SaaS companies, had a lot of success with those companies like Rewind that you may know is doing very, very well. I'm very happy with that. But we also have interest in, investing with impact. And so looking at the impact, impact can be lots of things. We certainly, through investment, create a lot of jobs and employment in the region. And so there's impact economically, obviously, and but also impact from a sector perspective. So clean tech, life sciences, health tech are big sector focuses with many of our members as we move forward, looking at that. And then I don't know if you played with ChatGPT yet to see if it can help you with your life, but obviously the impact of ChatGPT and technologies like that is fairly high. That question comes up: how are companies that are presenting adjusting to AI? And I would say that really hits all sectors. We're seeing, how do you bring in AI into your health tech solutions? How do you bring AI into your clean tech solutions? And so that I would see that sort of as a cross sector, but certainly the hot topic. I think everyone's done their little ChatGPT research thing. And that's probably the current big buzz is in that area.
Yeah, I love your point there too, that even if you're not an AI company, you better start thinking about
Yeah.
how AI might be disrupting your business model. You better think that through. I love, Jennifer, that you talked about community impact, and Suzanne, let's come back to you. You know, one of the ways Capital Angels Network, and quite frankly, lots of people in Ottawa can have an impact in the technology sector is striking a better balance, gender equity balance. So talk to us a little bit about, Suzanne, about the role that, or the importance of diversity to CAN.
I want to talk more generally. First of all, in where I see that we're going, it's really quite interesting to see. It's almost becoming normalized to have at least one co-founder in a startup. It's not 100%, but it's becoming more the norm, and we see a lot of female co-founders present to us. We know the data is out there that women entrepreneurs return on investments for investors are from a data point higher than those that aren't from diverse teams. So what we're seeing is very strong founders. I'm not saying any bias at all. I see our group really embracing a strong founder wherever they come from. So it's really getting a lot more interesting and I think the other part is that female co-founders will go on to invest in other startups, and they'll likely hire more tech female and diverse tech teams. So it has it's a multiplier effect, I guess you'd say.
And Jennifer, maybe I'll get you to chime in on this, because I know you do a lot of work with SheBoot, and is a female founder or a female co-founder a different type of founder? I'm curious about that.
Yeah, I think so. I mean, obviously, there's always overlaps in any stereotype you can come up with.
For sure.
So nothing is definitively one way or the other. But I do think women founders and women CEOs are more likely to spend time on sort of a realistic growth plan. A little less likely to do the moonshots. And this is why, from a returns perspective, in the studies that they've done, they tend to provide more consistent returns because their plan, a lot more time goes into that plan and the realistic nature of the plan. The downside of that sort of realistic view of the world is, if you're an investor looking for the big hockey stick, you're going to say the women founders aren't shooting for the moon, which can happen. I mean, some obviously are. So there's that balance between the shooting for the moon and having a steady growth. And in this particular climate, the steady growth plan is actually quite a prudent plan. While we wait to see what happens with VC capital over the next couple of years. And also, we just know from a diversity perspective, we know diverse teams. So if you've got a mix of people on your leadership team, that just helps overall, because you don't get that group think, where you miss things because everybody on your leadership team has the same experience and same background. So, so we do find that. And, as we started working on diversity, and when we look at diversity, we look at gender diversity, obviously, ethnic diversity, but also sector diversity. So the group several years ago was primarily people from the tech sector. And that also helps with, diversity of thought when we're looking at deals, getting different perspectives from different sector backgrounds. We have doctors. So when we're looking at health tech, we've got people who would actually use the tech involved in the discussion and things like that. So it's really made an interesting dynamic looking at diversity from all those different lenses.
Yes, Jennifer, I think diversity in the broader sense of the word is exactly the right way of thinking about it. And I can't believe we've come to the end of the interview already. It seems like we just started. But listen, Jennifer, I'm going to give you the final word here. The main sponsor of our Techopia project is EY, and their slogan is building a better working world. That's a bit of a moonshot. But I wanted to ask you, Jennifer, when you think of that, how are you personally or CAN building a better working world? What comes to mind?
So I think a few things. one, as you invest in early stage companies, it just gives them the capacity and to grow the company. And, and we work with our companies to help them with their growth strategies. I think one thing if you're in the sector, you may have seen over the last few years, a growing emphasis on mental health. And, we're not looking for our founders to totally burn out. So making sure that, these companies have the supports that they need to be successful, and that, yes, we want you to work 100 hours a week, but we don't really. We actually want you to see your family and take breaks and, have a balanced life, because, even an overnight success of a startup has typically been going for years before we decide that they're an overnight success. So it's, you're in for the long haul. We want to make sure that the companies are, have the supports and everything that they need to be in it for the long haul. So.
Jennifer, that sounds like a better working world to me. So thanks for that thought. And Suzanne, we'll wrap up here in just a few seconds, but how can people get more information about the Capital Angels Network?
You can go to capitalangels.ca, and we've got Mashup coming up the end of the month. Check it out.
Okay, that's excellent. So go to that website. We're going to flash it there on screen and put it in the YouTube description. So listen, Suzanne, Jennifer, thank you so much for joining us. Thank you for what you're doing to help sustain the technology ecosystem and encourage these early stage companies. It is critically important. Thank you again.
Thank you, Michael.
Thanks,
and that
Michael.
That's Jennifer and Suzanne from Capital Angels Network. Thanks to again. Before we wrap up, let's take a look at some of the other great companies that are supporting Techopia. Techopia is brought to you by many great sponsors, such as EY, building a better working world. Number Crunch, offering virtual CFO services for SaaS companies. Pearly Robertson Hill and McDougall, a leader in business and technology sector law. TD Bank, specialized programs for technology companies. The University of Ottawa Faculty of Engineering, creating the next generation of technical talent. Techopia is not only a podcast, we post new articles daily at obj.ca/Techopia. And if you're on YouTube, please subscribe and click the bell icon. And before we wrap up, I want to point out there's a new technology project, Technology Magazine, that we've produced here at Techopia in a partnership with EY. And you can find that magazine, the digital edition of the magazine, by visiting techopia.eyinsights.ca. You can see that on the screen right now. I want to thank you for tuning in today and helping stay connected and informed with the local technology sector. Let's keep building Ottawa's technology utopia. That's Techopia. See you soon. Bye-bye.